So we want to bring in John Herrmann as well. We've also got with us Mike McCormick at Ball and Grainer. He tracks the financials. First of all, let me, John, bring you into this. You track the market, you track the economy.
Yes.
Obviously, we're focused on Goldman Sachs. You work at a financial firm. Let me ask you, that news, doesn't it all kind of change your outlook? Because this certainly puts another question mark out there, if you will.
Well, the thing is, it was a surprise to hear this news today, and I know that all of us are going to be following this, every minute of the day over the entire weekend into next week, that kind of thing. And I know we're all kind of excited about it, but we just have to keep a few things in mind. In terms of our forecast, we still see this economy in a very strong recovery. Profit growth is really very, very strong and likely to continue so for the next several quarters. And, from our standpoint, even the financial sectors, we saw today with some of the earlier announcements today with Bank of America, very excellent announcements on earnings. So, going forward, we think that, we're still on track for this recovery theme to continue and this profits growth theme to continue. So we're not backing off, with the Goldman result.
Hey, John, do you agree this isn't the catalyst that maybe turns the market around? Maybe it might be interest rates longer, down the road here.
You're looking for interest rate hikes and so on. You're looking way down the road on that. So this economy, Ben Bernanke's job is to continue to nurture this economic recovery, get the momentum building, really get enough momentum to make an impactful signal in terms of the jobs and job growth. That's the real key. The real focus is not to, punish someone from a situation that may or not have occurred 3 years ago. So basically, we think, the financial sector, we can see from some of the earnings announcements today, what banks are doing now is they're back to their old, back to their knitting, sticking to their knitting. They're back to very traditional type banking activities. They're being very successful. That's part of the Fed's program. We're trying to repair their balance sheets. That's going well. We can see from the steep yield curve that's really helping the entire sector, and that's all part of the program. So we don't really think Bernanke really deviates in any way from the near term, and this economy just continues to gain steam and continues to improve.
John, again, we're so focused on Goldman, understandably so, but none of this necessarily materially changes your outlook.
Absolutely not. As you mentioned, we had a very strong track record in looking at GDP and the unemployment rate and these kinds of things. And this, the banking sector is playing a crucial role in the economic recovery. And, we've seen earlier results today that's showing that the banking sector is really doing, it's doing the healing that it needs to do, and that's all great. The write-downs, by the end of the year, it's very likely that the write-downs on a year-on-year basis will be down versus last year, meaning that last year was the peak of the strain and the stress in the system. That's all fantastic. It's great for the outlook, longer term even. So, let's not overreact. Markets were up 9% year to date prior to the Goldman announcement. Now we're still up 7 and change from after Goldman. So we're still in good shape, I think.
Herrmann, I'm going to give you 20 seconds here. Anything new that could come out on Goldman that would change, that would make you start to then worry? And you got to be quick for me.
Really quick, no. The reason why control retail sales this week, we just saw it hit an all-time record high. We saw business equipment production, best gain in 17 quarters, and we're going higher from here. So there's nothing to slow this thing down right now.
All right, guys, I got to say goodbye. Thank you so much.